What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video. I apologize for the lack of content that I've been posting recently. My computer broke about a month and a half ago, and the process of building a new one was halted a few times because I was waiting on one particular piece that was on back order for 3 weeks. So for the last month, I've been using my colleague's computer who's been in Miami, so the timing was pretty good in terms of when my computer happened to blow up. But going forward, now that I have a new computer, expect more videos from me in the near term, and I'll get back to posting these more often. So in this video, this is going to be a shorter video. We're going to be going over what the market's been doing, some key context to look out for, and then going forward, some of the key areas that I will be looking at for potential trade opportunities. So with that said, we'll hop right into it. So the S&P and the NASDAQ are both at all-time highs, okay? On the flip side, you could see, despite the S&P and the NASDAQ being at all-time highs, the Dow Jones and the Russell have not been participating in this rally. In fact, this rally has been the majority of tech names, okay? So tech has been leading the market over the last, couple months or even beyond that, but especially near term. And the reason I say that is, like I said, look at the month, right? The last month, the Russell is down about 3%. The Dow Jones is down about 2.25%, whereas the S&P is up 4 3/4 or 4 1/3, and the NASDAQ is up 8.5% over that same time frame. Okay, now let's look at the equal weighted indices. Okay, this is the S&P 500 as if all 11 sectors within the index were equally weighted. Okay, so normally you'll have, or how it's structured normally is tech makes up the vast majority of the S&P 500. RSP, which is the ticker of this symbol, shows the S&P as if all 11 sectors are equally weighted. And you can see, despite the S&P 500 futures and the regular SPY or SPX, whatever you look at, being at all-time highs, RSP has not broken all-time highs that were made in 2024, okay? So that goes to show you yet again that this particular rally that we've been seeing is mainly because of tech strength, okay? Same deal with QQQ, right? If you go to QQQE, same exact concept. It's the NASDAQ 100 as if all those names were equally weighted, as opposed to, say Nvidia, Microsoft, and Apple being more of the weighting than the others, okay? You could see, similar to what I just talked about for RSP, the NASDAQ, the NASDAQ 100, hasn't even broken its high back in 2021. Okay, that's very, very important. So I'm going to go ahead and draw a trend line. Okay, so you could see all I'm doing is connecting the dots from the all-time high back in 2021 to the high in March 7th and then again March 21st. And you could see, yes, we're close to breaking that, but we haven't yet. Okay, and the fact that the NASDAQ, the regular NASDAQ, the regular NASDAQ in terms of how it's weighted, it's been making a new high basically every single day for the last 2 weeks. Okay, so the fact that the equal weighted NASDAQ 100 and the S&P have not been participating in making all-time highs as well shows that the breadth of the entire market is poor. When I say breadth is poor, that doesn't mean that I'm telling you that a sell-off is going to occur. Instead, I'm just saying that you'd rather have a broader rally across the entire market as opposed to seeing just one sector carry the weight of all of the others, okay? So essentially, I'm saying that this current rally isn't too healthy It could switch tomorrow. You could see a broader rally occur tomorrow and then beyond then. However, right how it sits right now, it's not looking too appealing, especially where the RSI is right now, and I'm going to show you that in a second. Now, there's two arguments. People can argue, oh, well, the sectors that have not participated can catch up and extend the market even higher. Yes, I'm not picking sides, I'm just giving you the argument. The other argument is the fact that the other sectors that have not been participating are going to eventually, make the outperforming sectors lag and get too tired and then ultimately roll over, right? We don't know which side of the argument is going to be the case, but I'm just giving you both sides and for you to kind of think about yourself to understand it, more, clearly. My fault. So, that's that, right? RSI. Let's look at the RSI. The RSI is pretty insane. I'm gonna draw the RSI and the Nasdaq, which is more insane as opposed to the S&P, right? So I just want to show you down here, right? I drew the RSI to where it's at currently. It's about 81, right? I'm gonna lift this up. So 81. Let's see the last time the Nasdaq was at an 81 RSI, right? It got close in 2021, right? 2020, it got very close, right? So let's just call it 2020. So 4 years ago is when the Nasdaq was at an RSI of 81, right? So essentially what I'm trying to tell you guys is that this is very, very stretched, and this does not happen often, okay? It literally went from being oversold to overbought within 1 month. Not even oversold to overbought. Oversold to very overbought in 1 month, which is pretty spectacular in terms of, how everything looked just 1 month ago. Everyone, I shouldn't say everyone, but a lot of people were, had fear. A lot of people thought the market was going to come off 1,000 handles in the Nasdaq, and now we're at all-time highs, and very stretched beyond all-time, or in terms of valuation based on the RSI index, okay? Solely based on the RSI. So this, it's when it comes to buying these highs, it's not that appealing because of some of these signs that I'm going over. Okay, and very, very, I just want to make this very clear. I'm not saying that I am a seller in this market. I'm more so saying that I would be cautious where the market is at currently. Ideally, if I'm going to be buying the overall market, I want to wait for that RSI to kind of come back a little bit, and kind of capitalize on the next dip that occurs, and we'll be going over where some of the key areas to look at for if that dip does occur. Okay, this is another thing I wanted to talk about, right? Kind of alongside of what I've been saying. This is from Sentiment Trader, which you could see the logo down there. And Sentiment Trader said the Nasdaq 100 continues to notch higher, or notch record high after record high. Many of its stocks are not only lagging, but they're falling to monthly, quarterly, or even yearly lows and below their 10, 50, and 200-day moving averages. Okay, so you can see there's a massive divergence right now. The fact that that Nasdaq 100 is rallying, but the breadth of these different metrics, right? The 10-day, the 50-day, and the 200-day, the percentage of the Nasdaq stocks within the index are declining below those moving averages despite the overall price of the underlying asset going up. So like I said, this current rally technically is not healthy because there's a very, very small amount of stocks that are making this move, right? The Nasdaq, right? The Nasdaq has been very, very, very influenced by NVIDIA, right? So if I go to NVIDIA, this is another thing that I wanted to point out, okay? NVIDIA, going over the RSI, for whatever reason, every time it gets to 84, it sells off, okay? Now, will that happen in the future? Who knows? But historically speaking, each time that has occurred on the daily time frame, it has resulted in a sell-off, right? You have back in May of 2023, right? Got to 84, right? It got to 84 in January, February, a couple times in February, and then again in March. Now, the one in March worked in terms of a sell-off, but you could see just because it is at that 84 and it hits overbought beyond that 84 level on the RSI metric, it doesn't necessarily mean that it's going to mark the high and it's going to continuously sell off, because ever since those 84 tests occurred, it continues to go higher. Okay, those 84 tests, though, however, tend to mark a period where it takes a little bit of a breather. Okay, so anytime in the future that NVIDIA hits that 84 mark on the daily time frame RSI, I personally would look for some relief to come in, okay? And that's just totally based on what it has done historically in terms of where the RSI has kind of made a high at in the past, okay? So I would definitely look at that 84. As you could see, like I said, it's happened 5 different times over the last year or two, and it's worked pretty well, okay? So NVIDIA has been carrying the overall market. In fact, you could see right here, look at these, right? From Apple down to AMD. NVIDIA was the only name that closed green on Friday. Apple was down 1.1%, Microsoft was down about 0.5%, Google was down 1.2%, so on and so forth, right? Amazon down 0.68%. Even AMD, which is another semiconductor, was down 2.38%. Did not move in unison with its older brother or father, NVIDIA, I should say, right? King NVIDIA and Prince AMD diverged on Friday, which it's pretty crazy. So the NASDAQ has been influenced by the strength that we have seen in NVIDIA, okay? Now, can NVIDIA continue to rally to 150, 175, 200? Yes. I'm not going to sit here and tell you guys that that is impossible, because it is possible, okay? And if that does occur, the S&P and the NASDAQ will sustain value, because NVIDIA is the #1 weighted name in the entire market. Just as of Friday, it surpassed Microsoft in taking that leadership in terms of market capitalization weighting. Okay, so wherever NVIDIA goes, likely the S&P and the NASDAQ will follow, okay? And the fact that this is at all-time highs and it continues and it continues and it continues makes it very, very difficult to predict what's going to happen in the near term, okay? However, let's go over one more thing in terms of sector heat map. I just want to show you guys what the overall sectors have been looking like over the last month. So clearly over the last month, technology has outperformed. It's up 9.25%. This is also technology. It's just considered communication services, right? If I go to that, you'll see your Meta, your Google, Netflix, right? EA, T-Mobile, right? So a lot of the sectors, or a lot of these equities, are within the tech sector. So this is tech and this is technically tech as well. And you could see those are the only 2 sectors outside of XLY, which is, your even Amazon, Tesla, right? This is more so a mix of different things, but mainly technology and communication services are the only 2 that are green, whereas healthcare, consumer staples, energy, financials, industrials, utilities, materials, real estate, they're all down. So you could see that that goes to show you another point of view or perspective, that tech has been the biggest influence in the market driving higher. Okay, can it continue? Yes. Is it healthy? No. Okay, that's what I wanted to really get into. Now, going over some key areas to look at. Okay, one thing is the US 500. Okay, US 500 is just the cash index of the S&P 500. Okay, it is basically SPX. Okay, this I just wanted to show you guys this trend line, right? Going from July 27, 2023, right? You could see it latches onto one high there in March of 2024, and then another high in April of 2024. Okay, we are now coming right back up to that area. Okay, you could see it's gotten, it's tested a few times so far. Okay, so going forward in the near term, I would look at that trend line to kind of gauge relative strength and weakness in the very near term. If it fails there, and it certainly could, especially with combination with where the NASDAQ RSI is, and seeing signs of exhaustion going on, right? I could be wrong, but seeing those different things and seeing where the SPX cash index is right now, this could be a near-term top. And now, do I expect the S&P to come off 300 handles? No. Okay, but if this does occur, I wanted to go over some key areas to look at. Okay, so off the rip, we have this level here, this trend line. Okay, that acted as three areas of resistance last week. Okay, so this has not been retested. So this area would be the first area that I would be looking at. Okay, 51.15 to 51.10 ish. Okay, that's the first area. Second area is down here. Okay, this area down here, ideally, I would want it to coincide with this downtrend line support that we had last week. Okay, I'm going to make this blue, and ideally, you want those two to coincide, which would be down here, which would be on June 25th. Ideally, on June 24th, June 25th, June 26th, those two areas of context, of technical context, would line up. Okay, now, is that going to happen on that specific date perfectly? Who knows? It could, it could not. I don't know. You don't know. Okay, but if it does, that will be a key area. That's 5,400 on the S&P 500 futures on the September contract. Okay, so that's another area to look out for. Beyond that, we also have the 20-day moving average, which has been pretty damn useful this year. Okay, mainly on the NASDAQ. The NASDAQ has been riding this 20-day moving average up way clearer than the S&P has. You could see that the three tests on Friday, May 23rd, or my fault, Friday, May 31st, June 3rd, and June 4th, all three of those daily candles on the NASDAQ hit that 20-day moving average and managed to close above it. So if a drop does occur on the NASDAQ specifically, I would wait, or I would really gauge how it reacts to that 20-day moving average to see if it can close above that again, okay, similar to what it did over here. Okay, so that's very, very important. And then another level on the NASDAQ is this level here. It was 19,930-ish. Okay, you could see this was previous resistance, right, which turned into support. Okay, and then again, you could see if we go to even a 15-minute chart, you could see again price was defended there on the pullback on Monday. Price defended there, and then it resulted in a very large uptrend move. Okay, so going forward, I would keep an eye on that level as well, that 19,936 level. And if we use a measured move, that's about 1.44% away. And let me see if that would line up 1.44%. Assuming they move together, you know, I could be off on this, but assuming they move together, S&P will probably be around 5480. I would like to see it closer to this low over here, so you could kind of use that and the NASDAQ together to see if they bounce at areas of support. But that's all I have for you today. Like I said, I just wanted to kind of pop my head in and say what's been going on with the whole computer thing, and kind of talk about my very near-term areas of interest. So that's that. If you guys like this video, comment, subscribe, like, whatever you got to do, and I'll see you soon. Peace.